All right, so we're on number 8. We just titled this Buy Trucks and Equipment to Grow to Save Taxes. And we were just talking, this is basically real businesses as you grow and scale and get your operations going, how you invest for the subsequent years in equipment and in people is the real fundamentals of great tax planning. Most people get to the end of the year and they're like, especially if you're an S Corp or a pass-through entities like a Schedule C, you're looking at your bank account. I haven't spent this money. I got 100 G's sitting in there, and you're like, what do I do? Like, am I really going to? But then talk to us about the dilemma. So I got 100 G's sitting there. I'll buy a truck. You buy it with debt. You get to write off the entire truck if you use like a bonus depreciation or a Section 170. But then what if I want to sell it 2 years from now? Or maybe not a truck. Maybe it's more of like a trailer that we're going to be hauling around. These great pressure washing trailers. Walk us through this dilemma and what should people be thinking about? Because tax planning is really where it's at. Planning your equipment and your people. But walk us through that farmer's dilemma, dude.
Yeah, so Midwest boy, man, you got to talk about farmers around here. But this is what I call the farmer's dilemma is buying equipment, especially when you're growing or even when you hit kind of a stable place where you're not seeing huge spikes in revenue year over year. So let's talk about this. Let's live out a real example here, Rob. You go buy a brand new truck. You've always wanted this thing. It's beautiful. It's a Chevy 1500 High Country. It's gorgeous. It's maroon. It's all chromed out. $70,000. Great. We just created a sweet tax deduction for us this year. Next year comes around. Man, we had another great year, Rob. We really made good money again. I love this truck, dude. It looks so good. It's really nice. It does everything we want it to, but it's beautiful to drive around in. I'm not going to trade it in this year. I'm going to keep it for another couple of years. All of a sudden, now your income spikes because last year you had this nice big write-off, and now all of a sudden, boy, we don't have any write-offs because we bought the truck last year and wrote it all off instead of writing it over 5 years. So, okay, you sit down with your CPA and he says, okay, go do it again. The High Countries went up to 75,000 this year. The dealer said they'd give you 60 on trade-in. Here's the dirty secret that nobody talks to you when they're talking about buying their airplanes or buying their $250,000 G-Wagons. If you're following people on TikTok.
Right up a G-Wagon, yeah.
Yeah, right. Well, the next year that they traded in, they got to pick all that income up for what they traded it in for. So you got
when you depreciate it, you sell it back. There's recapture. So
yes,
folks,
it's worth zero in the eyes of the IRS. So now all of a sudden you're like, now I got to pick up $60,000. I go buy the $75,000 truck. So the offset between those is we only created $15,000 deduction. We didn't do a whole lot for ourselves. If we would have wrote the thing off over 5 years, we would have been close to that $50,000 deduction. Now, I say that because when you're in growth mode and you're adding your second truck or another trailer, or maybe you're buying two because you're really seeing that growth and you got some taxes that are going to come, this is where you can start to see some advantage of writing some of this stuff off and really taking advantage, especially when you're growing, keep some of that cash close to you. But if you're in a steady position where you're maybe seeing 10 to 20% growth each year, where it's not substantial, huge, adding a bunch of crews, boy, doing some of this depreciation like this can really hurt you year over year. And where it kills you is, I call it the hills and valleys. One year you don't get the write-off, so your tax rate skyrockets and you jump yourself into the 32% tax bracket. The next year we need new equipment, so you buy a bunch and you drop down to the 10% tax bracket.
Yeah.
This is where if we took a little time and schemed around some of this, boy, let's find ourselves right in that 22. We never want to jump to that 32, but boy, we want to utilize as much as those. Yeah, exactly.
And you can't.
And that's what we're going to do for you guys if we're looking.
Yeah, pressure washers. Yeah. The biggest thing is you need somebody engaged through the whole year, providing proactive tax planning. Somebody who's tied into your books and making sure that things are done right, but also that they're identifying these opportunities to bring to you to say, hey, we've got some schedules coming due. You're thinking of selling this stuff. And this is where you're a CPA, Drake. Like, folks don't understand this. There's a lot of tax guys out there, nothing against enrolled agents, nothing against just your regular accountants without the credentials. But like, you're no joke. And I'm not trying to just get you to call Drake and book a consultation, which you should. But managing your write-offs, your scheduled depreciations, managing your income with your S Corp, with small business retirement plans, and then managing how you're going to hire people, your advertising dollars, and these schedules. it's not that you should be, it's not that it needs to be too fancy, but it's that
Right.
if you don't have a CPA or a tax wise person guiding these conversations, you waste time, you waste money, and you make mistakes and you make dumb decisions. And that's
Yep.
probably the biggest thing that we see is that people do this stuff. They make these decisions. And once you've sold that truck, it's too late. Tough nuts. Like you owe
Yep.
it. There's nothing you can do. So our advice is sign up with Drake. And as part of your outsourced accounting service where you do the taxes at the end of the year, you're going to help them do tax planning throughout the year. You're going to manage that S Corp, pay in their taxes for them, keep the books, manage the depreciation, the schedule. You're also checking in quarterly to talk about these game plans. And I think the biggest thing that, what thoughts come to mind as we kind of hit on
Yeah,
it?
to manage expectations here, really we're going to help you think long term, but also in the short term, right? Let's help you out this year, but let's also put some vision in your life around what your next 10, 25, 50 years of tax look like. And let's actually be proactive on that. We talk about proactive throughout the year all the time. And sometimes that is just for the current year. But man, we're going to be proactive for your life, right? Your business is a huge component of your everyday life. And it's probably going to be the biggest thing you ever sell. If you grow this thing up and sell it, it's probably going to be the biggest transaction that'll ever happen inside of your life. And so, how do we make sure that let's make this year great, but let's also make sure in 10 years' time that we're not just getting crushed then either, right? Let's have some foresight and vision, not just for this year, but over time, because this equipment is a huge part of the value of your business. The contracts are important, the service you provide is important, but the equipment that you grow and harness and really utilize every day is a massive component of your business. And making sure you're doing these things right to one, save taxes today, but also to be cognizant of what that looks like over the next 10 years is very important. And it's pretty tough to get right all the time.
So if you're not convinced that you're doing everything possible to reduce your taxes, if you're wasting any time whatsoever doing your own bookkeeping or anything like that, and if anything that we just talked about resonates with you, book a consultation. Drake will connect with you for 30 minutes. It's really good if you can send over your tax return so we can look at the schedules, take a look at what you got going. And man, we're on a mission to find opportunities to reduce your taxes, to add value, to help you be more productive, to help you be more efficient. Like, we want your business. We're a new generation, a new group of accounting firms that are coming by and trying to add more value. Like, the easy thing is for us to sit back and, okay, let's do your tax returns. And I cleaned up your books. You know what's hard is to work with a smaller group of people like you are, Drake, and providing the leadership and the guidance. And we're not going to, that's the other thing. You keep them efficient. You're not all over them all the time. Like, this may sound like a lot. And you're like, God, I just want to, let me go slap my earphones in and just go work. I just want to leave me alone. That's what you do. Like, you help them be able to do that. Like,
Yep.
what kind of frequency are you meeting with guys usually throughout the year? And I know it's all over the place for different types.
Yeah.
What would they
The
expect?
best ones are once a month. If we can meet with you once a month, middle of the month, have an hour-long sit down where you're engaged in this meeting, where your phone's sitting off to the side and you're ready to go. And here's the thing, dude, if we talk to any of our clients, they will say that meeting is the best part of their month. They are going to get tons of value out of it. But the other thing that they're going to get too is just mental clarity. I joke with everybody that it's a therapy session, that half that meeting is therapy. But it is, man, because when you're a business owner, it's tough to talk to other people about these things. Your wife's probably sick of hearing about it. Your husband doesn't care. And your employees probably shouldn't know this level of information about your business. So we can help you work through those current issues that you're seeing and really give you some of that clarity. We're not just going to talk about taxes. We're going to talk about how do we effectively hire employees and incentivize them? How do we make sure we're putting good metrics inside of your business? Taxes are huge because they're a gigantic expense in your life every year. But how do we increase morale? How do we make sure productivity's high? How do we set good metrics to actually make sure that you guys are hitting goals? That's what we're going to do. And so what that meeting looks like, we're going to come super prepared. We're going to do 80% of the heavy lifting. I tell my clients all the time, if you hate financials, you're never going to get out of your life. You're always going to have to worry about taxes and some level of numbers. I'm going to put it on a silver platter for you. We're going to do 80% of the heavy lifting. It's going to be right here for you. Option A, pros and cons. B, pros and cons. That way you can make really, really good decisions in your business, but also have some of the best information to make those decisions.
And you guys just do the stuff for them too. Like, that's the other thing. think we just do it.
Exactly.
And that I think that's the best. So book a consultation, Performance Financial LLC. We're going to get on to these next ones.